Welcome back. Now let's get the perspective of the financial markets about the first quarter 2020 GDP and capital importation data. And I have with me the Chief Executive of Afrinvest Securities, Ayodeji Ebo, to further analyze the numbers. Good morning, Ms. Ebo. Thanks for coming on the program. Well, let's start off with the capital importation report data, which comes as a huge surprise. Of course, $5.85 billion in the first quarter compared to $3.8 billion in Q4 2019. What do you actually make of these numbers?
Yeah, what we need to first look at is in terms of the comparison. So on a year-on-year basis, looking at Q1 2019, you will discover that there was a decrease. But on a quarter-on-quarter basis, that's on Q4, comparing it to Q4 2019. And when you look at, in terms of the yield environment, because when you dissect the figure, you still see that there's heavy reliance, close to 80%, on foreign portfolio investment. Q1 2019 yields on treasury bills, short-term instruments, were still as high as 17–18%. So we saw significant inflow from foreign investors within that period. Coming to Q4 2019, that was the period where we had the segmentation of the Nigerian treasury bills market. There were a lot of uncertainties within the space within that period. So we saw significant decline. Yes, yields were still a bit attractive, but because of the perceived illiquidity of the HOMO market, where the foreign investors were allowed to play, we saw that resulted to the decline that we saw within that particular period. And coming to Q1, which is the Q1 2020, you still the CBN provided some form of comfort that there will be like the counterparty to provide liquidity for the HOMO market. So we saw that significant inflow in Q1 2020. You would look at, if you check the average liquidity in the I&E window was as high as $458 million then. So that's provided some form of comfort. And looking at the equities too within that period, you discover that year to date in January was as high as, I think, 7.5%. We saw significant inflow also into the market. So when you're comparing, looking at the data, one, we need to still recognize that it's the heavy reliance on foreign portfolio investment, about 80%. And you also discover that Q1 2020, based on last year yields was higher, and that attracted a lot of interest. And comparing it to last quarter, because of some of the policies of the CBN, that reduced participation of foreign investors.
Now, we've talked about the huge contribution of portfolio investments now, but how proportional is investment repatriation from the country?
Yeah, when you look at looking at the data in Q1 2020, we saw significant sell-off in the fixed income market, which wasn't peculiar to Nigeria, across emerging markets on the back of the COVID-19 pandemic. Yeah, but for most of the fund managers, the foreign investors, it's also a yield game. The FMDQ FX futures market has continued to provide some form of hedging for most of the investors. So the risk of foreign exchange losses would take care of that. But the only concern they had then was liquidity. Will CBN be able to supply when they want to exit, and they will be able to supply to the I&E window? That was the major challenge. So in terms of repatriation, yes, we saw significant repatriation, but this report captured just only what is coming in capital importation. So did not capture in terms of the outflow. But if you look at, for looking at the Nigerian Stock Exchange, the FPI data, you see that there's significant outflow. I think about 150 billion, if you had for January, February, March, was significant compared to the inflow we had on the Nigerian Stock Exchange. So in terms of capital repatriation, yeah, we saw that, but currently liquidity within the investors and exporters window has reduced. That's still down from the high of close to average of $400 million. Currently, I think for May is around $35 million. That's very, very low. So, and there's been a lot of pent-up demand that the CBN have not been able to meet. Yes, we've been hearing a lot of, in terms of providing confidence that they will supply. But we feel that something needs to be done quickly regarding that.
Now, let's talk about the financial services sector's contribution. Now, of course, we saw about $3 billion from the bank specifically. What could have informed such an increase?
For the financial sector, yeah, you would notice that within the financial sector space, it's still money market instrument. It's the major instrument within that space. So based on the overall contribution of 70% to total capital importation, the financial sector will enjoy that major part of it because those instruments are trading within that particular space.
Now, in terms of FDI, now one would have thought that the Dangote refinery construction would constitute an increase to that sector, but what could have happened? Because that wasn't the case.
Yes, for the FDI, you would if you do like a 5-year trend analysis on the FDI data, you would discover the consistent decline, and we feel that the government is not paying more attention to that. If you check in terms of neighboring countries, in terms of the regarding the FDI, rather, foreign direct investment that they attract, very significant, multiples, even Ghana as high as $20 billion. But for Nigeria to attract just about $241 million, that's really very small. And if we cannot grow that, then we shouldn't expect any meaningful growth. We need to be able to review in terms of policy around why are the foreign direct investors, why do they prefer to invest in neighboring countries than in Nigeria? The market is here, over 200 million people. The market is there, and from any rational investor wants to site its manufacturing industry close to the market, proximity to market is critical so that they can also be able to take advantage of cost. But because of some of the bottlenecks in terms of policy inconsistency, insecurity, those things, government needs to provide comfort regarding that. And for us to be able to grow, and even for the CBN, if we continue to rely on FPI, there will continue to be pressure on the CBN because most of those funds are short-term. They will always withdraw them. But if you have FDI, that would stay for a while, and that would even help provide confidence. It will also generate employment, and that would boost in terms of standard of living and productivity of the Nigerian economy.
But with crude oil prices now back up at around $35 a barrel, how optimistic are you about foreign inflows into the country in the near future?
In terms of good crude oil prices going up, positive for Nigeria in terms of revenue. But in terms of investments, because we still know capital importation is still based on foreign portfolio investments. So what will attract them now will be yield. So if you look at the treasury bills market, which is currently segmented, Homo bills is around single-digit rates. For the CBN to attract significant inflow within that space, they need to take that yield back to its previous level, which is double digits, to attract enough foreign portfolio investors. But what would also be scaring away investors currently is the illiquidity at the importer and I&E window that most of the foreign investors are not able to pull out their funds. If you recall, look at the FMDQ FX futures market is NDF, non-deliverable forward. So what they get is the Naira difference, but they still need to go and source for their dollars. And now, if that liquidity of sourcing for the dollars is not there, it means what they're after is the ability to take out their funds at their will. So if they want to take out their funds and they can't achieve that, that would be sending a very negative signal to potential investors that will bring their funds. Because what you look at in the last 1-2 months, for most of the activity that we're also seeing are funds that have been trapped. So rather than continue to wait for the CBN, some of them deployed those funds to the equities market, deployed those funds to the Homo market just buy time, pending when CBN is ready to supply dollars.
There are indications now that the federal government will sell off some assets. How is that likely to shape capital importation for Nigeria?
Yeah, in terms of selling those assets, because of still that policy inconsistency, for some of the foreign direct investors that would have come to maybe take a stake or buy a bit of the holdings from the government, may not be too comfortable with that. We've had scenarios where you invest in companies, another government comes in, they withdraw that contract, and you can lose your funds. So if we don't provide enough confidence for foreign investors in terms of enforcement of contracts, most contracts should be able to live beyond the government, and we need to be able to provide stability. You hear, like there are some rumors around the privatization, power sector privatization. Those rumors shouldn't even be coming up in terms of reversing the privatization. It sends a very wrong signal even to potential investors when they are trying to look at Nigeria. So if we need to attract, the government wants to attract foreign direct investment. If you analyze the foreign direct investment portion, about 80% is equities, which we feel that for most of the tech companies that have attracted investment rather through the private equity guys or the venture capitalists are the major parts that accounted for that. But if we don't provide confidence, then it may be difficult for government to attract foreign inflow to take in some of those stakes, because they also need that. They need that to create more revenue. When you look at the budget deficit, estimated about 5.2 trillion. But when you look at based on actual performance, based on past period, you will know that that deficit is as high as 7 trillion naira if we want to look at based on actual performance. So government needs to be able to raise revenue. Domestic investors, they don't also even have confidence in terms of investing in government because of that policy inconsistency. So if we don't address that main issue, then attracting investments for government parastatals may be very challenging.
We need to wrap up this conversation very quickly, but let's talk about the GDP figures now. There's an argument that the GDP was calculated based on Q1 2019 and Q1 2020, and that, of course, limited the effect of the pandemic on the GDP. But if it had been calculated based on Q4 2019 to the first quarter of 2020, the true picture of the effect would have been reflected. Now, on what side of the divide are you on?
No, I think what we need to first understand, there's a quarter-on-quarter analysis and also a year-on-year analysis. So when the National Bureau of Statistics is comparing to previous quarter, that's a year-on-year, which you look at based on that data. But when you are comparing, we are doing a quarter-on-quarter, that's the preceding quarter. You are doing a quarter-on-quarter analysis based on Q4 2019. So I don't feel that there's anything wrong, because you see the data, they give you the figure for the quarter-on-quarter, they give you the figure for the year-on-year. For the quarter, last quarter, we grew by 2.55%, and this quarter, we grew by 1.87% year-on-year. If you want to calculate your quarter-on-quarter data, you have the real GDP data, you have the nominal GDP data. You can arrive on your you can arrive at the growth of your quarter-on-quarter analysis. So I feel there's really nothing wrong in terms of the calculation of the GDP data.
Chief Executive of Afrinvest Securities, Ayodeji Ebo, thanks for coming on Business
Thanks
Morning.
for having me.